Bitcoin's 2025 rally at risk, the shocking truth you need to know. Hey crypto crew, it's your boy Zeb back with another Bitcoin breakdown. After the wild ride of 2024, all eyes are on 2025. And for good reason. We've got a pro-Bitcoin president stepping into the Oval Office. Talk of clear crypto regulations finally happening. It's like the stars are aligning for a Bitcoin bull run like no other. Excited sound effect. Zeb, hallelujah. I can almost taste that sweet, sweet moon landing. But hold your horses, my crypto comrades, because today, we're diving deep into the danger zone. Yeah, you heard me right. Amid all this Bitcoin hype, there are some serious risks lurking in the shadows, risks that could derail BTC's moon mission before it even leaves the launch pad. We're talking about the kind of risks that keep you up at night, the kind that make you question everything you thought you knew about Bitcoin's future. So, if you're ready to face the hard truths and prepare for the unexpected, buckle up because things are about to get real. Music transitions to a serious tone. Disclaimer. Zeb, before we dive in, remember, nothing in this video should be taken as financial or investment advice. This video is meant to educate you on the possible challenges BTC could face. Nobody can predict the future, so always do your own research. The US failing to establish a Bitcoin reserve is a major threat to BTC's 2025 rally. Remember the 2024 Bitcoin Act? It proposed buying 1 million BTC over 5 years to create a strategic Bitcoin reserve. But regulatory hurdles and Senate pushback make this difficult. Critics argue Bitcoin's volatility makes it risky for a strategic reserve. Federal Reserve Chairman Jerome Powell dismisses the idea, citing legal constraints. This cautious stance stings for Bitcoin bulls and could slow institutional investment. Alright crypto crew, let's move on to the second challenge Bitcoin could face in 2025: major governments selling off their BTC holdings. I know it's not exactly the most uplifting scenario, but hey, we're here to face the facts, right? So let's talk about China. As you know, China has a bit of a love-hate relationship with crypto. On one hand, they're cracking down on Bitcoin mining and ICOs like there's no tomorrow. But on the other hand, they're sitting on a massive pile of Bitcoin, an estimated 190,000 BTC to be exact. That's second only to the US, folks. Now imagine if tensions between the US and China escalate, say, due to those proposed tariffs or trade wars everyone's been talking about. What's to stop China from dumping their Bitcoin stash on the market to crash the price and stick it to the US? I'll tell you what, absolutely nothing. It's a scary thought, right? A coordinated attack on Bitcoin by one of the world's most powerful countries could send shockwaves through the market, spooking investors and undermining those pro-Bitcoin policies the new US administration is trying to implement. And it's not just China we have to worry about. Other countries like the UK or Ukraine might also be tempted to cash in their Bitcoin chips to fund their own needs. If you think about it, it's a classic prisoner's dilemma. Each country acting in its own self-interest could end up hurting Bitcoin's price in the long run. Hold on to your hats, crypto crew, because we're about to explore another potential risk to Bitcoin's 2025 rally: publicly traded companies being forced to sell their BTC holdings. Imagine this. A major company, let's say MicroStrategy, with its massive Bitcoin stash, suddenly announces it has to dump all its BTC to cover unexpected losses or pay off debts. What do you think would happen to the market? Yeah, you guessed it. Chaos. A massive sell-off like that could trigger a domino effect, with other companies following suit, sending Bitcoin's price into a freefall. MicroStrategy, as you know, is the poster child for corporate Bitcoin adoption, with Michael Saylor practically turning into Bitcoin's biggest cheerleader. They've bet big on BTC, and so far it's paid off handsomely. But what if the tides turn? What if MicroStrategy's core business takes a hit, or the market takes an unexpected downturn, putting pressure on their finances? Would they be forced to liquidate their Bitcoin holdings to stay afloat? Now, before you hit the panic button, it's important to remember that MicroStrategy has been very strategic about its Bitcoin acquisitions, structuring its debt in a way that makes forced liquidation unlikely. Plus, they've repeatedly stated their commitment to Bitcoin for the long haul, even announcing plans to buy even more BTC in the future. That's a good sign, right? It shows that they're not in it for a quick buck. They genuinely believe in Bitcoin's potential. But MicroStrategy isn't the only player in the game. Other publicly traded companies like Marathon Digital and Riot Blockchain, which are heavily involved in Bitcoin mining, might also be tempted to sell some of their BTC holdings to cover operational costs or weather market volatility. The real risk comes from those unexpected forced liquidations, especially by companies with large Bitcoin holdings like MicroStrategy. Alright, crypto crew, buckle up because we're about to enter the twilight zone of Bitcoin risks, the return of Satoshi Nakamoto. Yeah, you heard me right. We're talking about the mysterious creator of Bitcoin, the crypto enigma wrapped in a riddle. Satoshi went off the grid in April 2011. Since then, radio silence. Those Bitcoin wallets linked to Satoshi, untouched, dormant. They hold around 1 million BTC, roughly 5% of Bitcoin's total supply. Imagine one of these legendary wallets springs to life. The crypto world would lose its collective mind. Speculation would run rampant. Is Satoshi back? Are they about to cash out? The fear of a massive sell-off could trigger a panic. The impact of Satoshi's return could go far beyond the price of Bitcoin. Alright, crypto crew, we've covered a lot of ground today, from government Bitcoin sales to the return of Satoshi Nakamoto. But hold on tight because there's one more risk we need to talk about, the double whammy of rising interest rates and inflation. Now you might be thinking, Zeb, what does inflation have to do with Bitcoin? Well, my friends, in the interconnected world of finance, everything is connected. Imagine this. The global economy starts heating up. Maybe it's those tariffs we talked about earlier, or maybe it's a surge in demand due to post-pandemic recovery. Whatever the reason, prices start to rise, and rise, and rise some more. Suddenly we're facing the dreaded I-word, inflation. People start panicking. Their hard-earned money isn't going as far as it used to. Governments are under pressure to do something, anything to stop the bleeding. Enter the Federal Reserve, the big kahuna of monetary policy. Their weapon of choice? Interest rates. To combat inflation, the Fed might decide to raise interest rates. Now, here's where things get interesting for Bitcoin. Historically, rising interest rates haven't been kind to risk assets like crypto. Why? Well, when interest rates go up, investors can earn a decent return by simply parking their money in safe haven assets like government bonds. Suddenly, those risky bets on Bitcoin and other cryptocurrencies don't seem as appealing. So what happens? Money flows out of crypto and into those boring but stable investments, causing Bitcoin's price to take a hit. But wait, there's a plot twist. If interest rates rise too much too fast, it could actually backfire, pushing the economy into a recession. And what does the Fed do when faced with a recession? You guessed it. They lower interest rates and start printing more money to stimulate the economy. And that, my friends, could actually be bullish for Bitcoin in the long run. Alright, crypto crew, take a deep breath. I know we just went through a whirlwind of potential risks for Bitcoin in 2025, and it might seem a little overwhelming. But before you run for the hills and sell all your Bitcoin, let's take a step back and remember why we're all so bullish on this revolutionary technology in the first place. Despite all the challenges, 2025 is shaping up to be a monumental year for Bitcoin. Why? Well, for starters, we've got that much-anticipated regulatory clarity on the horizon, especially with a more crypto-friendly administration in the White House. That alone could be a game-changer, attracting institutional investors and paving the way for mainstream adoption. And let's not forget about the Bitcoin halving event, which is just around the corner. Historically, halving years have been incredibly bullish for Bitcoin, sending its price soaring to new all-time highs. Plus, there's that growing institutional interest in Bitcoin ETFs, which could unlock a flood of new investment from Wall Street giants. That's it for today, folks. Remember, while 2025 could be massive for Bitcoin, it's always smart to prepare for the unexpected. Drop a like if you enjoyed this video, subscribe for more crypto insights, and let me know your thoughts in the comments below. Until next time, stay curious and stay crypto savvy.